Purchasing your first home or refinancing your current home are all major financial decisions that necessitate having the right person on your side. Dan French at Nova Home Loans will work with you from day one to make sure the process is as easy as possible. Contact Dan French today at danfrenchnova.com, or you can call me directly at 702-216-3907. And to learn more about home financing, please make sure to tune into the Market Snapshot every Sunday from 12 to 1 p.m. to find out all the information that's going on in financing and real estate.
NMLS number 369115. Broker number 0902429.
The opinions of the hosts on KDWN are their own and do not necessarily reflect the views of this station, its management, or Beasley Media Group.
This is Market Snapshot with Dan French from Nova Home Loans with the latest information about home loans in Las Vegas. Now, here's Dan French.
This is that ice cold Michelle fight for that white gold. This one for them hood girls, them good girls, straight masterpieces. Stylin', wildin', living it up in the city. Got Chuck's on with Saint Laurent. Gotta kiss myself, I'm so pretty. I'm too hot. Call the police and the fireman.
Welcome to the Market Snapshot. This is Dan French with Nova Home Loans. I'm here today with Chakits Krulsawat from Simply Vegas. Chuck.
Hello, everybody.
And I'm also here with Doug. He's our producer. How you doing today, Doug?
I'm doing pretty good, sir. How are you?
I'm doing great.
Glad to hear it.
Did you see Doug? He's got a new haircut. He's looking fresh.
Yeah, he looked good coming in today. I like that.
Freshening up.
It's always
I got like, you guys are making me step up my game over here.
That's right.
We're gonna come in with suit and ties next week, Doug. You ready?
I don't own a tie.
Oh, all right. I'll get you one. We'll do a clip on.
And also a loan application as well.
It's always a pleasure to educate the Las Vegas community on financing and real estate. We say this every week. And Chuck, I'm really grateful for that. How about yourself? You feel grateful on that?
Yeah, that's why we're here 7 days a week, and that's why we bring this content. I mean, we could be at, Mandalay Bay Beach hanging out, doing something.
Yeah, having cocktails, right?
That's right, cocktails.
Cocktails. So, events. What do we got, Chuck?
I want to talk about the Floyd Mayweather since Friday when tickets went on
Wait,
sale.
what is that?
The Floyd Mayweather fight.
That's going on?
Yeah, it's next week.
Oh, okay. I didn't know.
I can't wait. Well, the interesting part about it is we talked about this a couple of weeks ago about the tickets. The average ticket was sales about $1,500, but the amazing thing that they're saying that the resale tickets are going to be about $7,500 average. That's crazy.
I think I'm going to take a break in lending and try to get some tickets so I can do this part-time.
Hustle some tickets? I just can't see myself paying $7,500 for a ticket. That's just way too crazy. Hey, did you hear about the solar panels?
No.
Now
What's going on with solar?
Solar. They got this new program now with the city.
Mm-hmm.
Basically, you can get solar panels for your home with 0% financing, but what they're going to do is put a voluntary lien against your property. Now, that could really affect the sale of your property in the long run.
Yeah.
So be careful with that.
Yeah, because then you got to pay that lien before you can even sell it.
That's right.
Any profit, any equity in your home.
So, I mean, if you're going to get that, I would actually just do regular financing, do a credit card or something like that versus doing a voluntary lien.
Or, yeah, like a small loan from a bank.
Yeah, that's
big bank.
correct.
What else? Anything else?
No, you tell me what you got.
Well, I told you I was driving the other day, and I looked at some billboards, and I think we're trying to get an NHL team here.
Oh, wow.
Did you know about this?
Yeah, I knew about it, but here's the thing. They keep talking about it. Was that a gunshot or a hockey puck?
I don't know. I think somebody's...
that was supposed to be hockey.
Whoa.
Sorry.
I felt like I was in the game.
I felt like it was a drive-by.
Yeah. So I guess we have a billionaire, Bill Foley's going to come in and try to get a National Hockey League team here. And, the biggest hurdle that they've had is the fact that Las Vegans don't really tune into this. They don't put a lot of attention towards it. Yeah. And I think that's a huge deal because anybody that's trying to bring, we've had other teams here, the Wranglers and other teams that's come here and they've departed.
Yeah.
And the reason why is Las Vegans don't really partake in going to the events or watching it or really going on for the team versus, let's say, other states. Excuse me. So it's a big deal. But we get one. I might be a little excited for that.
I don't understand. Why would they bring hockey out? I would say football would be a lot profitable, wouldn't it?
Well, I think hockey might be the easiest to get, especially when they're building that arena you said they're talking about. Maybe they're going to be using that. I don't know, but I think it's.
So is he partnering up with MGM
no,
Resort, or is this independent?
He's going to use all of his own money to try to do this.
Man, what a baller, huh?
Yeah. So I'm like, wow. And we got a feel-good story. We have a disabled vets. Some of these disabled vets here in Las Vegas, they were actually having other, I guess you can say, Las Vegans and people in the community helping them rehabilitate their homes.
Nice.
Yeah, it was a part of the National Rebuilding Day. More than 900 local volunteers and sponsors, and more than 7,500 men spent. Man hours, and at least $250,000 to remodel 20 area homes here in Las Vegas.
Wow. When did this take place?
This was last week, and it was actually, I think it ended yesterday.
Oh,
yeah,
that's awesome.
That is awesome.
Giving back to the community.
Yeah, I mean, you get some, this person, one of the people there was renting. The thing is this, if you have a way to help or give back to people that have served in the military, why not do it? They're putting their lives at risk, and they've already done their time with that, and I think we owe them something in return, and if everybody pulls together and does that, I think it's a really good feel-good story. You know what I mean?
You're absolutely right.
Also, we've talked about this before on the shows, and I wanted to talk about what the new forms are being introduced, and we talked about this before, Chuck.
Yeah.
The CFPB, which is the Consumer Financial Protection Bureau, announced the completion of their new integrated mortgage disclosure forms, which is the RESPA X and TILA Z, which is really... it's a form. It's the final, or it's the initial good faith estimate.
Yes.
And it's also the initial TIL or TILA form. And what that does is it breaks down all of your payment and all of your cost of what you're going to be paying on that loan. And they're going to change it to a new form come August 1st, 2015. What they're going to replace it with, it's called, let me see here. It's the introduction is... The loan disclosure form is what it's going to be changed to, and this will replace the good faith estimate. And it's the new closing disclosure is what it's going to be. It's the new loan estimate, and so that's good. And then we also have other things going on.
I want to talk about that really quickly.
Yeah.
What's really important with that is keep in mind that if we are doing like a 40-day closing, okay, we don't want to close on the 40th day. We don't want to close on the last minute because they're going to have. They have some sort of timeline that they have a right to review everything. Is that correct?
Yeah, and that's what we're going to jump right into. It's
okay.
So the closing disclosure will replace the HUD-1 statement and the final TILA forms. Now, what will happen is the timing of this is important because somebody can really go in and look at when they get their loan and their final, let's say HUD and final TILA. They will now have a new form, which is the closing disclosure, where they have 3 days to review that form. And then that's before they go and sign a title.
So if you do a 40-day closing, you really only have 37 days.
Well, yeah, exactly. Or if you say I'm going to write a 30-day contract, you really
have 27.
You have to account for that. Okay. And I think if you have the ability, like my company does, to do in-house funding, in-house underwriting, have control over the file, I think it's very important. And I think when this comes out for this specific reason. Nova Home Loans is already ahead of the game. They're already putting disclosures together for this. They're already kind of getting set up on all this. And, that's what they typically do because they're very compliant oriented.
Yes.
So they're already getting set up. And I think at some point, when this transition occurs, it's not going to be a huge deal for my company, but I think it might be a bigger deal for other companies because really you could lose a file or lose a closing of escrow if you don't plan accordingly for these new rules that's coming in August 1st. So I think that's very big. Let me ask this question. If you're writing a contract, you would still write it on a 30-day, but now as a real estate agent, you have to tell them, hey, you have 3 less days to get this done because really you have, those 3 days at the end of the loan that you can review the final HUD and the final TIL form.
Yeah, I mean, when this comes out, I think what I'm going to do is instead of writing at 30 days, I'll just write it at 35 days just to be on the safe side.
Yeah, and if you have and if you have extra days, then you have extra days, and I think it's going to help, especially when the transition occurs, because then everybody's going to be like, well, I'm still writing 30 days. Why can't you get the loan done? Well, we have a little bit more restrictions now as loan officers and lenders. So, but you know what? We're going to dip right into the housing the housing rundown.
Market rundown.
We have housing market statistics. We're also going to talk about interest rates trending, buying options for baby boomers, foreclosure rate on the rise. We're also going to speak about homes overpriced in Las Vegas, and then we're going to finish this up with lender versus realtor market face-off. And
Nice.
we're going to do some
I like
battle.
that segment.
Yeah, because we really do some battle. If you guys have any questions regarding the show, you can call in studio today at 257-5396. As always, our consultations are free.
Free?
For anybody listening to the show, all right? If you're not listening to the show, I've told you before, don't come looking at me for anything free. Also, if you want to get a free consultation outside of the show, you can call us at 781-6682. That's 781-NOVA. And if you want to ask me a question on Twitter, you can tweet me at 781-NOVA. And you can also view my website at danfrenchnova.com. And we've put together a series of educational videos. Chuck, we touch base on this every week. I want to keep driving our audience to these because this is really helping our audience.
Yes.
Tell us a little bit about it.
Well, it's a bunch of educational videos from real estate professionals that if you're a buyer, seller, and if you have questions, this is a great video clips will tell you a lot of great, tips and tricks.
Right.
And it could save you thousands of dollars. And
So-
it could be visit at simplyvegashomes.com.
Okay. Also, we're giving away a free appraisal and a free home inspection to anybody that
Woo,
gets a loan
free.
and gets a home through this show.
Wow.
Yeah,
We're always giving away free stuff.
I love free.
I do too.
Also, I'm giving away a free lunch for two to PF Chang's for the first caller that calls into the show. And be giving this at the end of the show, and then we'll send this off to you, and you guys can go and have lunch on us.
Free with PF Chang's again?
Free with PF Chang's.
Have you eaten there before?
Too many times.
Okay.
Yeah, it's very good,
You
though.
got too many free...
That's where I take all my dates.
Oh, okay.
So let's go ahead and go right into the money savings of the week. And I wanted to talk to you about this. We had a client purchasing a home. First-time home buyer. Okay, this person was purchasing a home, and we broke down the payment breakdown of what the cost would be to rent versus what his new mortgage would be. And he's roughly saving $142 on his mortgage by having a mortgage than he was renting.
That's awesome.
And I think it's not in every case, but I'm going to say in still most situations, it's still there.
I would say about 75%.
Yeah.
Especially if you're living on the south side of town, you're going to see a big difference.
Right. And the other thing is that, with you look at the interest write-off at the end of the year, he's saving even more money from that. Mm-hmm. And you know what's great is he was listening to the show, and he's one of the people that was listening to the show that's first-time home buyer that's taking advantage of us.
Yes.
So let's go into the housing market statistics. Chuck, give me some ideas. What's going on there?
I want to talk about the manufacturer or mobile homes for this sector. Right now, majority of the homes, it carries about 0.8% of market share. I mean, this sector has been stabilized since the beginning of the year. I mean, total homes that are for sale are only about 89 homes that are currently available. And private sales is about 88% of market shares for the mobile home sector. 11% are actually short sales, and bank loans are 1%. And this is very important. Now, I want you guys to understand this before even purchasing a mobile home. Mm-hmm. When you purchase these type of mobile homes, there's two things. You have real property and personal property. Now, what personal property is, when you're buying the mobile home, you're really only buying the mobile home. You're not buying the land, and that's very important. Okay, real property is basically when you're buying the mobile home, you're also buying the land.
Wow.
Okay, so that's very important. Now, Dan, can you finance on a mobile home?
Yeah, and I'm going to tell you about that. I just did one in Pahrump.
Oh, did you really?
I really did. And this has land on it. And I'm going to tell you, those are very hard to get done.
Where's that at, Pahrump?
I think it's up north, isn't it?
Nah.
Oh.
No, just kidding.
Isn't it next to Oregon? So, I was looking at it, and I was like, you know what? I think I can get this done. So I looked at all
Yeah.
my bank options. We have one bank option. Mm-hmm. One bank that will get this done.
Wow.
And if you look across the board, most people as a company will have to broker this to a specific bank
Yeah.
that will have the ability to get it done.
And I know the guidelines and the inspections are a little bit different from a regular sale.
Yeah, I
as
mean,
well.
you have to have it been converted.
Yeah.
You have to have the tie
Correct.
downs on the home. And
That is correct.
And when you
and
go
you
out,
have to have special inspections.
yeah, you have to have special inspections. And what happens is that a lot of times, not every time, but sometimes a client will go in and look at the fact that there's extra cost on a manufactured home, and it'll deter them from actually going to get that home.
You're absolutely right about that. Now, the overall inventory this week, we currently have 9,942 homes currently listed on the multiple listing service.
Right.
The inventory has increased by less than 1% since last week. So we're starting to see more homes come up on the market each week that goes by. Homes that sold has actually increased by 3.1% since last week. So homes are coming up on the market every week pretty quickly, and we are selling them pretty quickly as well.
So month to month, let's go look at this, okay? You
Yeah.
go from February to March.
Yeah.
Okay, April's obviously still, we're in the process of that. Where's the biggest increases, or do you know what the biggest increases are from month to month? You know, I know that there's a number of homes sold, I think, has increased. Is that correct?
That is correct.
Foreclosure has been up a little bit from month to month. Is that right?
The notice of default has increased, but as far as the trustee sale, it hasn't increased, because what's happening is, because when it goes into a notice of default, a lot of these owners of the property, they're getting educated and they're actually putting their properties on the market as a short sale. And that's what we're going to be talking about today. And what you'll see is there's going to start to be an increase in the near future of short sales.
Yeah, I want to let everybody know in our audience what's going on with that. Anything else on the housing market?
Yes. Also, I want to get back to short sales. We're at 11% of market shares. Bank loans, we're at 3.4%. So that has a slight decline. And remember, that goes back with the trustee sale, okay, where they're filing that notice of default, but at the trustee sale, you know, they're doing a short sale and they're tying up the property, and that's why we see that the short sales are kind of rising a little bit here.
I gotcha. All right. Well, thank you.
You're welcome.
Guess where rates finished up?
Tell me.
All right. I'm going right over interest rates
2.5?
trending.
No, I'm just kidding.
Can't really discuss
I
that.
know. I'm just kidding.
Mortgage bonds finished the week lower, which pushed mortgage rates, interest rates higher. Rates were neutral Monday morning, but pushed a little higher that afternoon and into Tuesday morning. There were few economic releases. One of them, the housing data was stronger than expected. Existing home sales printed a 5.19 million versus the expected 5.5 million units. You look at the new home sales, which came in at 41 versus the expected 475. Weekless jobless claims were 295 versus what they really thought it was going to come in at 285. And mortgage rates, if you look at the overall, it's very volatile throughout the whole week, and it's every week that way. But they did finish approximately about an eighth of a point worse. So if you look at the overall pricing, okay, even this month, we're still losing pricing. All right. And what I'm indicating is that rates will still keep going up. And if you have not exercised the idea of refinancing your home or purchasing, if you're looking to purchase a home, now's the time to give us a call. You can call us outside studio at 781-6682. That's 781-NOVA. You really got to take advantage of where rates are at. Money's cheap. I don't know how long it's going to last. Nobody has a crystal ball. We say this every week. But I'll tell you, if you take advantage of things now, you're going to look back and go, you know what? I'm really happy that I took advantage of the situation. I listened to the show, and I'm taking action.
And it doesn't hurt to run the numbers now to figure out where you're at.
So we're going to talk a little bit, Chuck, about baby boomers. All right. And what do you deal with baby boomers a lot?
Yeah, I deal a lot with baby boomers. And I do want to mention that, did you know baby boomers are people that were born between 1946 to 1964? I
did not know that.
And that there's over 76 million baby boomers in the world. In Clark County, right now, there's a total population of 2.8 million people out through the valley. About 2% of them are actually baby boomers that are actually moving out here.
And it's
Vegas.
growing.
It is.
It's growing.
And it's growing pretty rapidly. And I think the reason why it's growing so rapidly is because the state does not impose any income taxes and Social Security and income from retirement accounts.
That's a good point.
So, I mean, that's pretty big here.
Yeah, that's very big.
And also, I do want to mention this, too, as well, is that if you are the age of 62, okay, and you do qualify with the city for rebates, you can get up to 90% of property taxes each year. That's a big savings.
Yeah, that's huge.
That's real huge.
That's real huge. And here's the thing. I think with the problem with most baby boomers is there's a lot of them still coming here. I think here in Florida is a big commodity for them as far as
they're saying about
retirement.
almost 2% each year. So
right, and I think a lot of them look at it like there's limited options here for purchasing a home. And what I've noticed is I think the opportunities to buy homes is now out there, and I think it's starting
correct.
to grow.
Yeah.
And I think Clark County is now building more homes for 55 plus and older to accommodate these baby boomers and give them some home options, correct?
You're actually correct.
So I think homes right now, from what we looked at, that are under construction, are seen at the Shea Homes Senior Community in Ardiente, near Pecos Road and Tropical Parkway in North Las Vegas.
Mm-hmm. So that's the northwest side of town?
Yeah,
North side of
and
town?
what's funny about this is that I think when you look at the situation with baby boomers, they want to get into something nice. They're not looking for that big,
Yeah, they're looking to downsize.
A lot of them are. A lot of them just want something that's comfortable.
Yeah, and they don't want to maintain the backyard or anything like that.
No, and I think in those areas too, they're not putting grass.
Yeah.
They're just putting fake grass, which in some instances I like grass.
Mm-hmm.
I grew up where, we have grass in the front yard and the backyard. I actually had to,
Mm-hmm.
mow the lawn, which, you know what I mean? And I don't know if anybody's really doing that anymore, especially in Las Vegas. I'm sure some are, but it's really decreasing. And I think if you're a baby boomer, you don't want to do things like that.
Yeah, I mean, you just want to retire.
Yeah, and so there's been 15-year drought in local development of communities for people over 55. And I think there's two major builders that's come into play, and they're really making it a lot easier for people to pick and choose now with different options for buying homes.
That's good.
We have a couple of callers here, and they've been sitting here. I want to take one of these callers. Hi, this is... Oh. Hi, this is Dan French with Market Snapshot. How can I help you?
Hello?
Hi.
Hi.
How
Sorry
are you?
about that. I didn't hear you.
That's all right. I couldn't hear you either, so we're on the same page.
I just have actually a couple questions.
A couple? Okay.
I was wondering if you have any options for senior living and if there's any restrictions on senior home living.
Chuck, is there any restrictions that you know of?
Age restriction is number one. And
Right.
if you are going to buy, we need to make sure whoever's going on title, they're going to check the age on that. That's a big deal because of, a couple years ago, what I've started to see was that, I was working with clients where they were getting age restricted, but the kids would buy it and they'd be like 48, but they, for their parents, they wouldn't put their name on it and the transaction wouldn't go through. So that's a very big deal.
If you're looking for financing options, there's no real restrictions on us helping you. It's the same process.
Okay.
Yeah, I mean, it's something that we can definitely sit down and talk with you about and give you some information. I'd love to do that. What was your name again? I'm sorry.
Lisa.
Lisa. If you want to call us outside studio, you can reach us at 781-6682, and we'll schedule a free consultation. We'll give you some options. We're actually going over a segment right now on the baby boomers and some of the options they have, and would love to talk to you about it.
Dan, what I also noticed was that, every time I work with a new potential baby boomer, they think they can't get qualified for some reason.
I think
that's amazing.
Well, I think a lot of times, too, is that they have assets, they have things, but they feel like they want to live in a specific area.
Yeah.
They don't want to just go and live anywhere. They want to have some settledness to where they're living.
Yeah.
They want to have a little bit of an easier situation like we talked about.
Yeah.
So I think they're very picky and choosy, and they should be. They're older. They have, typically, most of them have money or assets in the bank, and they want to, find a nice, comfortable place for living, and that's what they're targeting.
Yeah, I mean, the objection that I always get is, hey, I'm 68 years old. I can't get a loan because I'm about to die.
Lisa, I just want to say thank you for calling into the Market Snapshot, and have a great rest of the day, okay?
You too.
Thank
Bye-bye.
you. So we're going to go right back into the baby boomers, and, some of these properties, and I wanted to talk about it. Let's go over a few of them. Like Sun City, Summerlin has 8,000 units. We have Sun City, Anthem has 7,200 homes. We have Sun City, McDonald Ranch has 2,500 units.
Yep.
We also have, like we talked about, Sienna, south of Summerlin, added a 1,900 units each to existing stocks. It means they're building.
Yeah.
And they're constantly expanding. And I think in this Las Vegas market, there's a lot of it's blended. Okay,
Yeah.
we have every age group that's out there, and everybody's being marketed to, and I think that's great because it's providing opportunity for millennials, it's providing for baby boomers, it's
Generation X.
yeah, I
and
mean
all,
any of them, and it's really giving them an idea and a situation where if you want to live here in Las Vegas, you can. They're marketing towards that, and they're even like I said, they're expanding just in that specific area.
So we are a very diverse city. It seems like.
We are, and I think there's less people coming in because we're not having that boom like we did, and there's not as many people coming to Las Vegas, so they're staying here. It's still a transient city. I mean, we still got the hotels and things that's going on, but I think if you look at it, a lot of people are starting to stay here now. Now you're hearing about, like we talked about, NHL teams and things like that.
Yeah.
It might work because people are going to start living here in Las Vegas and making a long-term home for them. And, I think this is going to be great. So also, people like we've talked about, 65, 70, 75 even, they're out, they're being active. They're out, they're still doing things. They're still working. They're still committing. A lot of them are contributing to society and to our community. And they're still out doing things, mountain biking, whatever it is. I mean, they're doing things. And
you're absolutely right, because people are now living up to like the age of 85 when it used to be about like 50s.
Yeah. And I mean, that's the average. Yeah, that's the average lifespan. So, I think when you look at it, we have options. We have dealt with quite a bit of baby boomers.
Yeah.
And I'm going to tell you that if you're looking to buy a home in the 55 or plus age community, please give us a call in studio, 702-257-5396. If you have any questions, if you want to schedule a free consultation outside studio, 781-6682. That's 781-NOVA. And we're going to talk about the foreclosure rate on the rise. Chuck, what's going on with that?
Well, like I said, I only have data since February, and it looks like the notice of default has increased up to 661. But the amazing thing is that the notice of trustee sale is at 483. So what that tells you, again, that there's a lot of notice of defaults that are coming up, which means, people are not making a payment on their home, so they're getting a letter saying that, hey, you've been late on your payment. But what I see here is that the sellers are getting smart, because once they get the letter of the trustee sale, they're probably working with an attorney or an agency like Simply Vegas. And what we're doing is we're stopping the notice of trustee sale, and we're doing a strategic short sale. Now, as far as the trustee's deed, there's only been half of that actually has gone through where it's been sold at the county courthouse.
Yeah, and we've talked about this. Nevada remains among the top states for foreclosure.
Yeah.
Okay? I think that's a big problem. I think the solution that they're looking at, and banks are trying to make it better to offer short sales and have a little bit shorter of a time frame for them to close them out. When we get back, we're going to talk more about foreclosure. This is Dan French with the Market Snapshot.
Current home are all major financial decisions that necessitate having the right person on your side. Dan French at Nova Home Loans will work with you from day one to make sure the process is as easy as possible. Contact Dan French today at danfrenchnova.com, or you can call me directly at 702-216-3907. And to learn more about home financing, please make sure to tune into the Market Snapshot every Sunday from 12 to 1 p.m. to find out all the information that's going on in financing and real estate.
NMLS number 369115. Broker number 0902429.
Welcome back to the Market Snapshot. It's Dan French with Nova Home Loans, and I'm here again today on a Sunday with my friend Chakits Krulsawat from Simply Vegas.
Howdy.
Are you country?
Country.
First Asian countryman I ever seen.
Do I look that Asian?
No, but I can definitely see it. No, it's not that bad.
Okay.
Foreclosure rates on the rise. Let's talk about that. Nevada remains among the top states for foreclosure. I think banks are trying to make it better, like we talked about, for people looking to short sale. They're trying to improve time frames. And I think the truth on notice of defaults is it really costs banks more money at the end of everything versus doing a short sale. And they really want to minimize the damages. They want to minimize the money out of pocket. So it's always better for them to do a short sale, but we still have an increase or a high increase and a large amount of foreclosures going on in Las Vegas.
That is correct. Now keep in mind, you're talking about the fees. Keep in mind that a bank will always want to do a short sale, because if they foreclose on a home, remember, they have to hire an attorney to get everything all done.
Yeah, I think as nationwide, we're one of the top states amongst, doing short sales or foreclosures, but I think Florida beat us.
That's absolutely right.
Yeah, and so when you look at it, have you seen people living in homes, 2-3 years still? Do you still see that? Where
I have a client right now. She's working with an attorney, and she hasn't probably been paying since for like 3 years. And there's a loophole in the system, and she's playing the game.
Yeah, and I think it's one of those things that it's. I think that's starting to get better though too. Is that right?
Now the thing about that is you got to keep in mind you can go that route, but if you go that route, you're probably never going to get another home loan again. Mm-hmm. And these are the things that you need to really understand, and that's why a strategic short sale is very important, and getting educated is very important as well.
Yeah, and they're looking at the situation that there's still roughly about 5.3 homes that are still underwater.
So we were looking at about 25% of homes that are underwater?
Yeah. I mean, that's
a lot.
big.
Yeah.
That's a lot. And we still need to exercise the idea of you have not short sold your home. We have stabilized that in a market. Mm-hmm. You're not going to get the values that you had before. I mean, listen, we've talked about this before, 10,000, 15,000 underwater.
Yeah, just like last week, we had a client that called you, right?
Yeah.
And was trying to do a refinance but couldn't, and
right.
It was $40,000 underwater.
Right.
Keep in mind, we've peaked. The properties are not going to go any higher.
Right. And
and if we peaked and you're $40,000 below,
mm-hmm.
Let's do a strategic short sale now and let's regroup. Because you can get a loan within 12 months or 24 months.
Well, we have options 1 day out. I'm not going to go into it because there is some restrictions to it.
Yeah.
But we did help a gentleman or tried to help a gentleman here that could have gotten a loan if he wanted to. He's still thinking about it, but he could have got a loan really a few months after his short sale.
So, there's options out here. And what's really important is that you got to sit down with Dan and myself and let's crunch the numbers and let's do a timeline to see if it really makes sense.
And if you do a short sale, we've talked about this as well, that if you look at the idea that other credit lines or trade lines on your let's say your credit report, they don't always, you don't really affect them. And doing the short sale, if you just do the short sale alone and that's it, you keep everything else intact, it really improves your credit score quite a bit quicker than, let's say, doing a foreclosure where typically everything on a foreclosure, not only is it looked at harsher, it's longer time frames to get back into a loan in most programs. You got to look at the idea that most people let their credit go, and now they're in a worse position doing a foreclosure than they did if they did a short sale.
Yeah.
So I think that's a huge thing, and lenders filed 3,070 foreclosure starts in Nevada in the first quarter. That's up 166% from the first quarter of 2014. Did you know that?
No, I didn't. That's big.
That's huge. And so, when you look at it from a standpoint of a realtor and you're saying, okay, look, I want to see if I have the ability to educate my client, let them know that doing a short sale is better than a foreclosure. Do you run into issues with somebody that just, hey, I'm already made up my mind, I'm walking away from the home. I'm just going to do the foreclosure because I don't want to deal with anything else. I'm sick of it. Do you deal with people like that and then you try to convert them to say, listen, it's going to be a little bit easier? I
don't want to say it's converting because that to me that's wrong. Okay. What we do is we really sit down and we educate our clients the pros and cons versus a short sale versus a foreclosure. Mm-hmm. And once we break it down and we show them the math, they understand it's better in their best interest to go ahead and do a strategic short sale.
Well, I'll tell you this too. If you look at the GLVAR, which found that 9.3% of local home sales were bank-owned properties in March, that was down. And I think that's good because it shows that there is some stability a little bit.
Yeah.
But it doesn't show the overall picture. And I think when you look at 25% of people out there still underwater, why do you think they haven't come forward?
I think they're holding on because I would say that some people may not be educated as far as where the market is heading. And, for the past first quarter, we've been consistent and stabilized.
Right.
I don't see the market jumping up like in 2013 and 2014,
right,
where we're jumping up, in certain neighborhoods up to 41%.
Right.
That just no longer exists right now.
Yeah.
And that's why it's so important that if you're out there and you're deciding to sell your home or list your home, it's got to be priced correctly. If not, what happens is you're going to be chasing the market.
Right. Well,
and that's a big deal.
I think if anybody out there listening to the show, I think if you're in that position, call us outside studio 781-6682, and we can determine together. We'll sit down. Chuck will sit down with you, and we'll determine if doing a short sale is feasible. If it's something that's going to be accomplishing your goals. If you're 10 or 15,000, that's really a decision up to you. I would probably sit around to see if we can get that value back. I don't know if I would just jump at that right away.
Yeah, at 10 to 20,000, if you ask me for my professional opinion, I would just say hang on because I'm in that situation. It's just my mortgage is so low that it's worth it for me to stay, and that's why it's so important. It's case by case basis here.
We got a caller on line one. Welcome to the Market Snapshot. This is Dan French. Who am I speaking with? Hello, this is Dan French, the Market Snapshot. Who am I speaking with?
Chakits.
You there? I guess nobody's there.
Yeah, I got disconnected.
So we're going to go right into homes overpriced in Las Vegas. There was quite a few homes we've talked about that have been overpriced, and I think the problem with this is a lot of people overprice their homes because we've seen that increase in value over the last couple of years, that appreciation. And I think when you see that appreciation, you have to look at the idea that it's not that same market. We're not having investors and hedge funds and people coming in and buying properties that's really making this an artificial market.
You're absolutely right.
So I think when you look at that, you got to look at the idea that you have to see the fact that there's an alternative solution, which is have realtors address the market conditions to sellers to educate them on how the market's doing. And I think really the solution to all this is if you have a home at fair market value, you can't really make a huge profit off of it. You have to find out why this is the home is priced where it's at. You got to get education from your real estate agent. And if you take the advice or the information from your realtor, you should consider lowering the amount of home or the selling amount of your home to accommodate what the market conditions are going for. Is that correct?
That's correct. And if you're an agent, you shouldn't even take the listing because you're wasting time and money, and you're putting that seller in an emotional position thinking that he can sell that home for that much. And that's not the right thing to do.
And we've also flattened. The market's flattened. You're not going to make as much profit off of the homes that you currently have. And in some locations, it's a declining market. We said about this last week.
Also, what I'm starting to notice is that these appraisals, they're getting pretty tough. They're not coming up and above like they used to.
I'm
telling you.
Not at all. And you know what? That's a good point
You
because
be conservative.
4 out of 6 appraisals from last week for me went under. And I get notification by email that says, "Hey, your appraisals come in less than what it should be. You need to take action."
You're absolutely right. I have a $300,000 home listed right now, and I got an offer for like $308. My client wanted to accept an offer at $308, but it's not going to appraise at $308.
So listen to this. If your house has been on the market for 60 plus days, okay, they have said that the market has had it grown to 57% for homes out there 60 plus days versus 52% a year ago.
Yeah.
And what that's saying is that it's going up, and people are really in a lot of ways overpricing their home. They're not listening to the real estate agent when they come in and say, your home is not this value anymore. It's just not there. And if you look at from last year in July, across the board, really, we've only gained about $5,000 in the average median price home here. It went from $200,000 to $205,000, and it's constantly fluctuating.
And that's not a big jump.
That's nothing.
Yeah.
That's nothing. That's, to me, when you start to see, I think when you have a mindset, and I think this is a problem here, when you have a mindset from 2 years ago when you started to see all that increase, people were getting that value back. I was one of them.
Yeah.
I had a home that was, I think it was $45,000 underwater. And I'm like, I'm short selling. I'm pulling the trigger. I got to get out of this situation. And I think with my mindset is, wow, look at how much value I got back. I didn't short sale it.
Yeah.
And then now I have equity in it. And I'm sitting there going, wow, I'm $20,000, $30,000 equity on this specific property.
Have you ever thought about listing your property?
No, and I don't want to now. But anyways, the reason why is I'll tell you right now is that I have realized myself as well that the market's flattened.
Yeah.
What I have for it right now is I'm not going to get anything more.
Yeah.
It's going to be a very slow process for me to get that. So if you look at it from overall, nearly 29,000 homes have sold through the association's multiple listing service in the last 12 months. The average sale price is $114 per square foot. And that's average.
Yeah.
Okay. I remember back in the days when it was $70, $75 per square foot, and that was the average. Remember those days?
And you know what? Back then, that was still expensive too.
Yeah. You're like, wow, are you telling me $75 a square foot? You're out of your mind.
Now, I want you guys to also keep in mind that Vegas is such a trendy city. The market fluctuates like every 4 months. It always changes. It's never the same. That's why, one month we could be, up making so much money and have all this equity in this home. The next month it's all in the short sales. Next month we're in REOs. So that's why it's so very important to listen to the show and be constantly kept update of what's going on within your marketplace.
Yeah, and if you look at it, what you got to also look at the idea is that you have 11%, nearly twice the national average, are delinquent. The national average is 6%.
Wow.
Yeah, so I think that's a big deal. And when you look at that, and you see the fact that the market is not going any direction other than you have more properties in the market, the supply is up, and the demand is down because you have buyers, but they're not buying these homes. But you still have people out there building homes and doing these things. It has to be at the right price. I think if you put it at the right price, you're going to get your house sold. But if you don't, and you think it's 60+ days, you really need to reevaluate what's going on here.
Yeah.
So let's go ahead and let's do the realtor versus lender face-off. And I wanted to go over this with you today, Chuck.
Okay.
And you ready to get this on?
Yeah, I'm always ready, man. I was here before you. Remember that. Hey, check this out. Okay. This is what I've noticed with buyers when they get approved with you, Dan. Sometimes they'll go out and they'll speak to a different lender and they say they can get an approved more. And it seems like they're always getting steered to other lenders. But I know with you, when you said that, hey, they're qualified for $350, they're only qualified for $350. Why is that where a different lender can say that they're qualified for like $400?
Well, I think a lot of times, too, is that you have write-offs, you have things that come into play. Maybe they're not looking at the idea that they're trying to approve them for, let's say, for bonuses or something out there that maybe they can't prove.
Yeah.
Maybe it's not a consistency of income. A lot of times they're over approving these clients. And I think once they get into a position and see that, hey, you know what, this is not really something we can approve them at, then they have to make the adjustment at the time of them trying to make an offer or get in a contract. So the deal is this. If you have a client out there, and with Nova Home Loans, I'm thoroughly looking at everything because I don't want to approve somebody. The last thing you want to do is approve somebody for more than they have, and then you get a contract accepted, and then you're scrambling going, oh my God, we can't use that income. Where's it at?
And you lost all this time, money, and effort into this deal. And that's why it's so important to have this dream team and to have the buyer on the same page as the lender and also the real estate agent too as well. That plays a real big part.
So my question to you is there a difference to show properties in another state, or I'm sorry, in another city, in Nevada? And, I don't know. Like we talked about Pahrump, which is next to Oregon, right? But anyways, Pahrump or another city, do you have different restrictions on there? And how do you approach that?
Here's the thing. If you're a licensed agent in the state of Nevada, it's all the same across the board. So nothing really changes. It's just what it comes down to is, does that agent really service that area? And are they pretty knowledgeable in that area?
Gotcha.
Now, let me ask you this right here. Let's talk about interest only. What is like an interest-only loan, and is it even feasible, or is it even worth it to do an interest-only, and when do you actually do it?
Well, we don't have interest-only loans anymore.
Okay.
Yeah, I mean, we don't really offer them. I think some places, I think in the state of Nevada, they have a stated income, and those things kind of tie together, I think, a little bit because that was kind of the same era.
Okay.
But as far as interest-only loans, we don't really do those.
So you're saying like we as in Nova Home Loans, or just in general?
I would just say in general. There's a lot of banks will not do them and touch them. There's a high risk to them.
Okay.
So I think, we kind of stay away from them. We still are on the fixed. We do have, adjustable rate mortgages and things. So, we have things to offer.
Okay. What's your question?
My question is it harder to get an offer accepted in a townhome versus a single-family residence home?
Not necessarily. That's why when we take a look at each, property, we evaluate it. We run the comps to see what the current, value is. We start off from there, and also we take a look as far as the type of loan that they have. That plays a big part. And the third thing is when we go into the property, I'm already identifying things that may come up with the appraisal issues as far as the items that need to be done. Just to give you an example, if it's an FHA, I walk into a property and it's missing, light fixtures, or it doesn't have like a range hood, it's missing a door, or let's just say, the alarm system is not there.
Right.
I mean, I'm sorry, not the alarm system, but the smoke detector. I know up front that I need to ask for these items up front to get the deal done. I mean, I don't have to, because later on when we get it back, I can renegotiate, but it's best to do the homework all up front so that way we're not wasting time nor money.
Okay. What's your question?
My question to you is an ARM loan. How does that actually work?
I think ARM loans are really, what I would use them for is if you're getting a jumbo loan, because what happens is it's fixed for a certain period of time. You have like a 5-1 arm or a 7-1 arm.
Yeah.
It's fixed for a certain period of time, which is 5 years or 7 years, and then it adjusts every year after.
Yeah.
Okay, and you have an index, and then there's a margin, and there's the margin set. The index is set for what your rate will be, and then the margin is how much it's going to adjust afterwards.
So it's almost like gambling then. Basically.
Well, I mean, I don't know if it's gambling, but let me say this: in some instances, people that do have ARM loans, especially on jumbo loans, they're still paying a little bit less of a mortgage
Are they really?
than they would if it was a fixed. Yeah, but they still run risk. I would say it's more of it's a little bit more of a risk because it could go up, and it could go up to a point where if rates are going to stay the way they are, then yeah, the fixed rate might make sense long term. But I think if you're looking short term, some people just use it a lot of times for payment shock, because if you get into a home, well, you can typically get a better interest rate off of an ARM loan, and then that payment will be less than what you would originally pay, and then after 5 or 7 years, it's going to adjust.
Yeah.
So for those first 5 or 7 years, you can actually think about, hey, do I want to get onto a fixed loan? Do I see rates going up? Do I want to refinance onto a fixed loan? And it's really a good benefit because, like I said, you're going to get a lot better interest rate on an ARM because of the risk that's involved. The bank's willing to give that out versus, let's say, a fixed loan.
Are the fees a little bit different on that? Or
No, they're the
thing?
same.
Okay.
There's no prepaid or anything like
Okay.
that. So, yeah. My question to you is, do you ever have an issue with somebody signing a buyer's broker agreement, and why do you need this?
Now, I'm going to answer this straight up, okay? If they're having an issue, that means that buyer does not have faith in me and what I do. Now, 99% of the time when I sit down with a client, when we go through the consultation, we break it down. We educate our clients on what's going on within the marketplace. We talk about customary practice. We talk about short sales, REOs, and traditional sales. So we really prepare our clients. What we do is really lay down the foundation and educate our clients.
Mm-hmm.
After we do the consultation, they really understand that we know what we're doing and we know what we're talking about. And they don't have a problem signing it. So
you're always having somebody sign that.
yeah, I mean, it's to keep
It's protecting you a little bit too, right?
Yeah, it is. It's to keep people honest. It's, hey, I'm going to give you 110%, and in return, you are going to work with me.
Okay.
Now, typically, the time frame, I do it for like 3 to 6 months. It just really depends, and it really depends on the marketplace because, and it also depends on the type of home that you're buying. If you're buying a $50,000 home, it's going to take me that much longer to get you a home. Now, if you're buying a $500,000 home or $1 million home, then the time frame could be shorter because it's easier to get because there's not that many buyers within that, that price point that are shopping. So.
What about you? You got a last question for me?
Yeah, let me ask you this. Points. Like, what is actually points, and when should I buy it down points?
Well, you mean points for interest rate or points that a company's charging you? Because let me reference between both. When you hear a point cost, okay, if you're looking at it from a company standpoint, that means they're charging you fees up front.
Yeah.
And Nova Home Loans, we don't do that. We don't need to do that, okay?
I like that.
So if you're looking at the interest rate part of it, okay, when you're saying, what are you charging me in points, or is there a buy down in point or cost? That means you're coming out of pocket and you're giving money to the bank to get your rate lower than what it needs to be, or where it's at, where I'm originally giving you, which is called your par rate. I don't think it's ever beneficial because you got
today's market, right?
Well, you got to look
pretty
at
good.
Yeah, you got to look at the idea though that how long are you going to stay in the home? You got to look at what is the cost difference. Sometimes it's $2,000 or $3,000 just to get it down, even if it's $1,000. What is the difference between the rate you're getting now versus the lower rate? If it's $15 or $20 in difference, why would to me it would take you 7-8 years before you finally break even and start making a profit off of it.
So that's where you got to really break it down.
Yeah, I mean, you got to look and see what's the long-term goals. And you know what? Let me say this. People's lives change quite a bit. And the average person stays in a home 5 to 7 years.
Yep.
So I would always say, look, I don't know if that's ever beneficial unless it's somebody that's an investor that maybe comes in and he's just trying to buy down the rate because he can get the huge profit off of a long-term investment that he has. But I mean, it's very rare.
It is, and I made a mistake like that because I think about maybe like 6-7 years ago, I was at the 5.5%, and I wanted to buy down to like 4.2, and I think it was more of an ego trip, and I spent about additional $7,000, and my wife was telling me, hey, hold on, and I decided not to do it, and I spent the $7,000, and next thing you know, 2 years ago, I refinanced it anyway for down to like that 4.2 down to like 3.2.5%, 3.2.
You bought it down that low?
Well, no, I didn't buy it down. I refinanced it after.
Oh,
And I
okay.
was thinking like 7 years ago, I just spent additional $7,000 for nothing when the market, dropped and the interest rate dropped. So
Yeah.
I spent all that money for nothing.
The best thing to do is call us outside studio 781-6682. What you got to do is you got to look at us as far as what your goals are. I'll sit down and try to address those goals and maybe accomplish whatever you're trying to accomplish and see if we can help you with that. I also want to go over the things that we offer free to the show. We have a free CMA, which is a comparable market analysis. Chuck, what is that?
This is a report to help buyers or sellers to identify a value of a property within the community. It will show you everything that's for sale, in contingent status, pending status, and also sold.
Hey, Doug, real quick. You know why we provide that lender versus realtor face-off, right?
Do I know why?
Yeah, you understand why. I mean, we obviously fight and go back and forth, but do you know why we do this, right?
No.
Okay.
No.
So here's the thing. When we're out and we're in the field, these are questions we're getting from our clients. And we like to address these things on the radio because if you're listening, maybe you've come across these questions, and it's helping educate people out there as far as, hey, if I run into a situation like this, is that going to help me? And it will help you. It's going to help where you're at. It's going to give you information that if it's something does come across, you know how to handle it. And that's every week we come up with new things because that's questions I meet with a lot of
I
clients.
never knew that. But then again, you should have said that at the beginning of the show.
Yeah, and so that's why I'm telling you now, Chuck. Who won this, Doug?
Well, you know what? It was a very tough one.
Yeah.
You guys were almost, blow to blow.
Uh-huh.
So I have to reflect upon earlier incidences.
Are we
in
going
the
to
show.
are we going to go to a decision on this one?
Well, you know what? It's going to have to be. I have to give the decision to Chuck it.
Of course.
You know why?
He said, "Chuck it." You better throw an S on that thing.
Chuck it.
There you go.
Chakits.
Well, the reason why was this, Dan.
I just call him C.
Is that he
Every time I
actually-
tell somebody that his name, they're like, "What does that mean?"
I just call him Chuck.
I'm talking foreign language here, so I'll just give him a Chuck.
He's a Chuck.
Yeah.
And you can call my guy
I
D.
actually I tried to give him his full first name and I messed it up. It was like that.
No, you actually corrected it. It was great.
But the reason why I was leaning towards you, even though you just almost erased it right there, was that Dan,
Yeah.
he complimented me on my haircut today. Said I was fresh. You did not notice I had a haircut today. You don't notice anything about me.
I think it's because you're a guy.
Well,
If you put a wig on, I think I'm going to notice some things.
I need a compliment too once in a while.
So here's why we. First off, I want to tell you the things that we offer for free. Again, we talked about the free CMA. We also give a free appraisal and free home inspection to anybody listening to the show. We give a free credit services. I have a free credit services department. Okay, Nova Home Loans will offer that. Anybody that's looking to buy a home will get you in a position to buy a home. It could be 2 months. It could be 12 months. We even had somebody come back 2 years. You know what? I still put them in my calendar to call them back. They probably will not know who I am, but that's the type of person that I am. I do first-time home buyer guide. What's that, Chuck?
First-time home buyer guide. It's actually a great book. If you're a first-time home buyer, this will lay down the foundation step by step to the path of home ownership.
So, and also we have the ability to give out a free consultation. Okay, and real quick, we're gonna we talked about that during the show. We're gonna give that free PF Changs to Lisa. We had a couple of callers that couldn't come through today, and we apologize if you guys are out there listening. We'll have that fixed next week. So again, if you guys have any questions about that, also, what's the key points to finding a right loan officer? I've told you this before. Interest rate is most important. Everybody tells me that. They call me and say, I want to get my best interest rate, lowest interest rate. And also the fees. It's important. So if you guys have any questions regarding the show, you can always reach us outside 781-6682. We want to say thank you for your listenership. This is Dan French with Nova Home Loans, and I'm here with Chakits Krulsawat from Simply Vegas. And again, we make this show to make you smarter home buyers and smarter home shoppers. We'll talk to you next week.